Before the break, we warned of a coming inflection point where investing may be turned upside down. What worked over the past 40 years may not work so well going forward. So what should you consider? Start with inflation hedges. These are things that do well when inflation rises. They can be precious metals, real assets, or hard assets. Think of it this way. When inflation rises, it really is the same as seeing the value of your dollar go down. A $500,000 house might go up in price to $550,000 in the event of 10% inflation. So owning a house could be viewed as an inflation hedge. You might want to own art, or diamonds, or rare stamps, or collectibles. One problem with those things, though, is liquidity. You have to find a buyer when you need to sell, and there are storage costs and insurance. How do you know what they're worth day to day? Another problem is divisibility. There may be a terrific $10 million painting you would love to own, but what if your portfolio only has $100,000? It's kind of hard to buy 1% of a painting. The good news is that there's a market of stocks where you have people ready to buy when you want to sell, and you can buy shares rather than whole companies. The key is to find the shares that fit the environment. Instead of buying a home, you can buy shares in a home builder or a company that produces building materials. You can buy shares in a gold miner rather than just buying gold. I'm not saying that stocks should be the be-all or end-all for your investments, but I am saying that you may need to start looking at a market of stocks rather than a stock market. And you may need to look outside the United States as well. One of the things that happened under the Trump administration was that he put America first. Our economy did well, at least until the pandemic, and our stock market has done better than foreign markets on average for the past 30 years, as shown in this chart from longtermtrends.net. The red line shows American stocks and the blue line shows foreign shares. We've beaten foreign markets for a long time, and the difference became very dramatic during the Trump administration. But will that last when Biden reverses all the Trump policies as he's promised to do? Maybe not. And there may be a problem, but also an opportunity for those who are willing to act. There are a number of European stocks, for example, that are better suited for the climate we see ahead. In Europe, they embraced socialism a long time ago, and that may explain their lower investment returns. But these stocks are also selling at substantially lower valuations. Think of it this way. American shares may be more like the Nifty 50, while European shares may be comparable to the less glamorous value stocks of the period. The key will be to find the right ones at the right time that meet your needs. Some of these European companies already understand how to profit in a socialist environment, but understanding foreign stocks requires good advice. And you need that. Beyond stocks, you may want to look at farmland. That's apparently where Bill Gates has been putting a lot of his money. Again, though, you can't rush into something you don't understand. Farmland can be terrific during inflationary periods, but you need expertise. Last year, we featured Mitzi Perdue in one of our COVID Live specials. She warned of a coming food crisis. She also told us about how she learned to invest in farmland. She's the daughter of the founder of the Sheraton Hotel chain and the widow of Frank Perdue, the poultry king. She's also the past president of the 35,000-member American Agri-Women Organization. Mitzi warned us that farmland, while it's potentially very profitable, it can also be very difficult for a novice. What we're saying here is that investors need expertise, and that leads us back to our second question. Do you feel adequately prepared to deal with the massive change we're facing?